so here's an A plus setup for Cardano. I know we rag on these guys all the time because they're cooks, but the truth is it's a cult coin, and at some point it's going to melt up. I mean, if you just look at the rate of videos produced on Cardano relative to any other coin outside of Bitcoin and Ethereum, this one gets the most, right? So this one in Doge, I would say, but at some point, the cult is going to take over, and these guys are dumb as fuck. They'll just keep bidding. They'll bid the highs. They'll bid the breakout. It's just going to be wild. So I do want to have exposure on a swing. And this video is going to be one part the setup, one part about kind of a case study on accumulation zones. So here's the weekly. It looks trash, but I mean the previous supply right here is looking to be flipped into support on the right. This is your weekly setup. Weekly external high got taken here into a bit of a liquidity void, and then it pushed down and targeted the weekly internal, the deepest one in discount. So that's been tagged. Doesn't mean that it's not going to rebalance the whole weekly internal, but realistically it took out this one, the most obvious one. It took out this one, and it tagged into the deepest one. So I don't know that it's going to go lower than that. Right now, within this dealing range, there's one liquidity void here. The difference between liquidity void and weekly internal imbalance is that you could see they tagged it over here a bit. So the liquidity void is the remaining imbalance that hasn't been tagged. And I only look at these as a liquidity void when it barely tagged into the original internal imbalance. So the weekly objective, this next move, is going to be into here, which is barely in equilibrium, and then ultimately the external high, which is going to be up here. What I also see on the daily within that dealing range, so within the weekly dealing range, you have a market maker model, and the way I'm viewing this, again, the external high and this liquidity pool got taken here. That's your sell program being activated. Closing below this structure right here was when your sell program is confirmed. Distribute, distribute, distribute. Here you tag the weekly internal. So this is where your buy program is activated. And now you have what I believe is an accumulation range. And I'll show you guys how I established that. But important to note as well, that liquidity void on the weekly is a daily imbalance, a pretty massive one, with equal highs just below. So this is going to be a really strong draw within the market maker model. Now in this fractal right here, this is where we're looking for accumulation. And I'll show you guys a little hack that I use in order to identify it. So we'll drop the time frame a bit. Actually, we'll go into the 15. And this range, you want to see aggressive stop loss raids. This range, you basically want to see a whole bunch of stops getting targeted on the lower time frame, 15 minutes. So this is what we have. We have an external raid that went into this was your external raid that went into the buy program, and then you form a new dealing range once it shifted above here. Internal raid here, and then you can start seeing aggressive stop hunting. So this is basically to target leverage traders that are on high leverage with very tight stops and liquidation prices below their stop or above, whatever. And you could see raid here, internal. Then they engineer some more liquidity in the range, take them out here, take them out here, here. So every single one of these is basically a low time frame exchange of coins. So basically the people that have very tight stops or very tight liquidation zones, they're getting targeted on every 15-minute drop. And then you get another push up. Another internal range gets taken out here and here. And this up at the top is defining the top of the accumulation zone, in my opinion. When you drop back in the range, you could start seeing again some aggressive stop hunting going on. One right here, one right here, here. even in here, this is how you know this is starting to get real cheeky. Like this zone right here, they're targeting every small liquidity pool to grab and exchange coins. And then you have one more at the bottom. This is kind of like an external low within this dealing range, but on the way down you could see they're just grabbing stops all the way. Another range over here forms, raid, 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 raid. So aggressive stop hunting in the range. And then what I'm doing with that red box is I'm defining an accumulation zone. So after this external raid, a new dealing range forms. That dealing range targets the internal range and discount. You get more stop hunts here, like a continuation purge, form a high, and then you start accumulating in that same zone. So you could see where I've marked it out, basically from where the aggressive stop hunting began over here. They're starting to do it here and here as well. All this is an accumulation range, basically between 34.5 to 32.5. And what that leads into is the actual setup that I'm watching. So keep in mind, this is part of the high time frame market maker model, and this is your setup within the range. So now that you've accumulated a ton of stops over here, you've established some engineered liquidity, and this is basically primed for a flush. When you guys hear me talk about inducement, all it is higher to intraday time frame liquidity pools that formed within the accumulation zone that are now kind of lined up, meaning they have ascending lows. So this is where it begins. Then you have this one right here and this one right here. And you could see even these two targeted the previous liquidity pool. So they're just aggressively taking stops, which is why I think there's going to be one more push down. If you push it into the daily time frame, you have this demand zone formed right here, right below this inducement, all the engineered liquidity in the range. Also, if you bring it into the 1 hour, you could see another demand zone form. And I'm calling this one an order block, not a demand zone, because what it did was it had an aggressive push down to run these stops, and then it shifted aggressively with pretty strong displacement above the high that formed before the raid of this low. So this is an untested 1 hour order block below these engineered liquidity pools. So the way I'm looking at the range in general is this whole area is demand, and it's sitting below the draw. We're already, since taking the high, we're already pushing down and forming this range. So I'm expecting one more flush either into the daily demand, or what it might do is something like this, where it flushes, gets some more liquidity in the range, and then one more drop into the 1 hour order block. And then I want to see structure form here. Maybe they even take that, but either way, I don't think we target deeper into the weekly internal imbalance. What I'm thinking is this is going to be the liquidity pool targeted, and then we get some sort of structure like that. Short-term low, long-term low, short-term low, and then we just ride. So this is going to be the setup. The swing trade itself, the way we're targeting after entry, is very simple. This will be your low risk buy somewhere over here, and again, it might go below that, but I doubt it. I'm thinking it's going to be somewhere in here, and this was already your low risk buy. This is just basically one more grab before the run, and we're targeting these equal highs going into the daily and weekly liquidity void, and then we're targeting the original consolidation. Above that, this can run once you have momentum above 80, assuming the low is in over here. You have some higher time frame wave structures that could target this massive liquidity pool, and then potentially even higher. But I'm taking it one level at a time, and as of now, the only target is going to be, the extreme target is going to be the 81 cents. So that's a quick explanation on accumulation zones, aggressive low time frame liquidity grabs, and how they engineer for a bigger flush to eventually expand out of the range. All right, guys, enjoy.